Hello dear students, welcome to Devika's Commerce and Management Academy. Forfeiture of shares and reissue of shares. In the last class, I taught you journal entries. 3 entries. One stage is at when you are issuing the shares at par, issuing the shares at premium, issuing the shares at discount. 9 journal entries I taught you. Are you perfect? If you are perfect, then only we'll go to the problem. Forfeiture of shares and reissue of shares. This is very important problem. If you understand this problem, you can work out any problem. Shall we enter? Please focus. Now the problem is here. A company invited the public to subscribe for 1 lakh equity shares. 1 lakh equity shares at 10 rupees each. Okay? At a premium of 1 rupee per share. This is premium problem. Okay? 1 lakh shares, actual cost is 10 rupees, premium is 1 rupee. On application, 3 rupees. On application, 3 rupees. On allotment, 3 rupees. This is including premium. Premium is 1 rupee, they said. Allotment means 2 rupees plus 1 rupee. 1 rupee is here, premium, as they said. So this 2 in 3 rupees, premium 1 rupee is included. On first call, 3 rupees. On final call, 2 rupees. Shall we write it here? It will be easy for us, okay? Application, I'll use blue marker. Application, 3 rupees. Allotment, 3 rupees. Here, premium is included. Premium how much? 1 rupee, okay? And first call, 3 rupees. Second or final call is 2 rupees. So altogether it is 11 rupees. 10 rupees plus 1 rupee premium extra. So up to here 2 lines you understood. Next one. Applications were received for 1,30,000 shares. How many applications are there actually? We have issued 1 lakh. But we received 1,30,000 applications. It means over subscription. How much is over? 30,000. We have issued 1 lakh, but we got 1,30,000, means 30,000 is over subscription. Applications for 20,000 shares were rejected. Out of this, 20,000 were rejected. 30,000 extra, na? Out of 30,000, 20,000 rejected, and allotment was made proportionately of the remaining applicants. Means rest of the 10,000 is allotted proportionately. Simply remember this, okay? Now all the money due was received except the final call of 3,000 shares. Final call 3,000 shares not received. Final call is this one. At this stage, 3,000 shares not received the amount. What happened after that? Which are forfeited, which are forfeited after due notice. 3,000 we did not receive. For this we have given a notice, prior notice. No response. Then this 3,000 is forfeited after due notice. This is forfeited problem. 3,000 is forfeited na? Now later these shares, means this 3,000 shares reissued at 8 rupees 50 paisa. Actual cost is 10 rupees na? This forfeited shares we are issuing at 8 rupees 50 paisa. It means there is a discount of 1 rupee 50 paisa. Remember, discount of 1 rupees 50 paisa. I taught you in the last class. Forfeited shares, issue of shares. For forfeited, 1 entry you'll write. And for reissue of shares, 2 entries you'll write. This is discount. 3 stages we have learned: at par, at premium, at discount. Now this is discount. Last column. 3 entries. Whatever I taught you, the same entries we are going to write. Now before that, journal entries, normal journal entries will pass. Then after that, that last 3 entries, means these 3, 9, 10, 11 comes. So 9th one is for forfeiture of shares, and the 10th one is reissue of shares, and 11th one is transferring to the capital reserve. Okay, now before that, general entries, whatever we write. So as per the problem, we have written enter problem here. Okay, now according to that, first one is that, general entries, bank account attached to share application account. Okay, when we are receiving share application amount, bank account attached to share application account. What kind of shares? Equity share. Okay, so bank account attached to equity share application account, general entry, always we get this entry, bank account attached to equity share application account. Application amount we are receiving. So for that, being application money received, how much we received? 1,30,000 shares we got it at the rate of 3 rupees. Application money is 3 rupees. How many shares we received? 1,30,000. Where it is? Here. 1,30,000 into 3. It comes to 3,90,000. This is first one. Then after that, we have to write oversubscription entry. Oversubscription entry, what do you write? Share application account. There we are going to adjust. Allotment, we don't do anything. Allotment entry will be as it is, this much only. Okay. Now application, there in application entry, we are going to adjust the oversubscription. How do we do that? Equity share application account attached to equity share capital account. Equity share application account attached to equity share capital account, to bank account, to share allotment account. Here actually it is 1 lakh only. 30,000 we got it extra. How much we are refunding? 10,000 we are refunding. They said na. Here applications were received 1,30,000. Applicants for 20,000 were readjusted. Allotment was made proportionately of the remaining applicants, and the rest of the money is rejected. Need not to say, understood. 20,000 is adjusted, means 10,000 is returned. Now the second entry is here. Always remember, extra amount we got it. Actually 1 lakh only we have issued, but 1,30,000 we got it. Out of that, 20,000 is adjusted. Sorry, 20,000 is rejected. 20,000 is rejected and 10,000 is accepted. For that, we have to write the entry. That entry is equity share application account. Along with application, we'll write this entry. Okay. Equity share application account attached to equity share capital account. How much we have issued? 1 lakh at the rate of 3 rupees. Okay, that we are writing. To bank account, 20,000 into 3. So applications for 20,000 were rejected. So rejected one you are writing. To bank account, 20,000 at the rate of 3 rupees. And to share allotment, how much we have allotted? 10,000. Extra one we have allotted. Actually 1 lakh we have issued. We got 1,30,000. Out of that, 20,000 we have rejected. Rejected is credit side, and also whatever we have accepted, that also comes on the credit side. Total issued 3 lakh. Okay, that is to equity share application account, capital account, 3 lakh. Here we have written equity share application account attached to, how much is the capital? To equity share capital account. 1 lakh into 3 rupees, it is 3 lakh. To bank account, 20,000 is rejected. So 20,000 at the rate of 3. And allotted how much? To share allotment, 10,000 extra we have allotted. 10,000 into 3, it comes to 30,000. Total allotment, rejected and extra allotment. Altogether it is 3,90,000. Share application account, equity share application account attached to, say along with me, it will be easy for you. Equity share application account attached to equity share capital account, to bank, rejected amount, okay, to share allotment account, whatever is accepted. So for this narration we are writing, being application money for 1 lakh shares is transferred to share capital account and balance is returned to applicants and also used for allotment of shares. 20,000 returned and 10,000 is used. Okay, so this is the entry for the oversubscription. If you understood this, rest of the entries are normal. Okay, this is allotment entries over. Now next one, it comes to application entries are over, 2 entries. Application is over. Now allotment entries, equity share allotment account to equity share capital account to securities premium account. Why securities premium? They said that premium is included in the allotment. Premium is included. If they could not mention it, then we would have written equity share allotment account to equity share capital account as usual. You know that entry. Here they said premium is included. So we are writing to securities premium account. This is due entry, due of allotment. Okay. Equity share allotment account to equity share capital to securities premium account. How much it is? Generally it is 1 lakh into 2 rupees. 1 lakh into 2 rupees, but premium is 1 rupee. So separately we have written share is 1 lakh into 2 rupees, 2 lakh. Premium is 1 lakh into 1 rupee, 1 lakh. Together it is 3 lakh rupees with premium. So what is the narration we are writing? Being the money due for allotment of 1 lakh shares. Due. When you are receiving, see, everything we received, application money we received, allotment money we received, first call also received. We have a problem at second call. Till that period, normal journal entries, due entry, received entry, due entry, received entry. That is what we are going to do. Now, this was the due entry, okay? So, due is this much. When you are receiving this allotment, bank account attached to equity share allotment account. We know this. Due is this. When you are receiving bank account attached to, how you are receiving? Through the share allotment. Okay. Bank account attached to equity share allotment account. How much we are receiving? 3 lakh. Isn't it? 3 into 1 lakh. 3 lakh we are receiving. Then this is over. Allotment is over. Next what else? First call. First call due. First call due entries, you know, equity share first call account attached to equity share capital account, due entry. Generally whatever we used to do, the same interest we are writing. Okay. Now here it comes to say first call is 3 rupees, right? 3 rupees into 1 lakh. 3 lakh only. One thing please remember, over subscription 10,000 we have accepted that, we are not going to write the entry. That comes only in second entry only. Rest of all the cases is we are focusing on 1 lakh only, because 1 lakh only we have issued, right? So this is first call due entry. First call amount we received. When we receive, what is the entry? Bank account attached to equity share first call account. You know this. So 3 lakh we have received. Next comes to second call. Second call due. Second call due entry is here. Equity share second call account attached to equity share capital. Due is how much? 2 rupees into 1 lakh shares. 1 lakh into 2 rupees. It is 2 lakh rupees. So here we did not receive total amount. They said that 3,000 is not received. 3,000 is not received. Rest of the amount is received. Out of 1 lakh shares into 2 rupees, it comes to 2 lakh. Na? Out of 2 lakh, only 3,000 received, not received. Rest of the amount is received. Whatever we have received for that, same like this entry, we are writing this one. Bank account attached to equity share second call account. Bank account attached to equity share second call account. How much we have received? See here, 1 lakh into 2 rupees. This is the 2 rupees, na? Actual amount is 2 rupees. It comes to 2 lakh. 3,000 not received. 3,000 into 2 rupees comes to 6,000 not received. So 2 lakh minus 6,000. It comes to 1,94,000 only we have received from the second call. You know this, okay? Bank account attached to equity share second call account. How much we received? We are supposed to receive 2 into 1 lakh, but 3,000 not received. That 3,000 into 2 rupees comes to 6,000. 6,000 will deduct it from the total of 1 lakh, 2 lakh. 2 lakh minus 6,000, it comes to 1,94,000. Am I clear up to here? Normal. Then after that what happened? So this 3,000 is not paid. Company forfeited after due notice. When company is forfeiting, what is the entry? You will write one entry, I told you. Now coming to that entry. So that is equity share capital account. Earlier all the entries equity share capital we have credited To cancellation of that, we are writing on the debit side. So equity share capital account debtor to equity share second call account. From the second call only we are not getting. So to second call account to shares forfeited. So here second call account 3000 into 2 rupees. It comes to how much? 3000 into 2 rupees, which is not received. Due is 6,000. Company has issued this. Issued. Where it is issued? Company forfeited. Company reissued it at 8 rupees 50 paisa. Shares forfeited. Reissued entry comes later. Right now you have to focus forfeited entry. Forfeited entry is here share equity share capital account debtor to share second call account. Second call is how much? 2 rupees. 2 rupees on 3000 is not paid. Not paid. Already what they have paid and company forfeited is here, shares forfeited, rest of the amount. 2 rupees not paid, company has forfeited 3000 into 8, rest of the amount, 8 rupees. So it comes to 24,000. So total it is this much. Being 3000 shares are forfeited for non-payment of second call. For not paying the second call, company has forfeited. How much? 30,000. 30,000 how do you got? 6,000 already they have paid and also 24,000 is due. So together. Now after that what they have done? They are later these shares reissued at 8 rupees 50 paisa per share. When company is reissuing, we'll have two entries. For reissuing one entry, another one is transferring to the reserve. For reissuing entry is bank account debtor, shares forfeited account debtor to equity share capital. Generally always you have to remember bank account debtor to equity share capital account. But here discount is there. They are issuing for 8 rupees 50 paisa. Cost is 10 rupees. Issuing for 8 rupees 50 paisa. It means 1 rupee 50 paisa is discount. That is why we are writing shares forfeited account debtor along with bank account debtor to equity share capital account. In between this we are writing shares forfeited account because it is issued for discount. This is discount amount. At what rate they are issuing? 8 rupees 50 paisa, right? So 3000 into 8 rupees 50 paisa. It comes to 25,500. 25,500. And the difference 10 rupees minus 8 rupees 50 paisa, that is 1 rupee 50 paisa is discount. So discount we are writing 3000 into 3000 shares na 3000 into 1 rupee 50 paisa. It comes to 4,500. Together everything is 30,000. We are writing being forfeited 3000 shares reissued at the rate of 8 rupees 50 paisa. Okay. Then after that what we have to do? Transfer the amount to the reserve. So what you are going to transfer is here, remember actual cost is 3000 into 8 rupees 50 paisa they are issuing for 25,500, 25,500. But what is they have not paid? Rest of the amount is paid for 3000. They did not pay only 6,000. Understand this point? 6,000 they did not pay. That is 3000 shares they did not pay. 3000 shares when they are reissuing at the rate of 8 rupees 50 paisa. 3000 into 8 rupees 50 paisa they are issuing. They are issuing means it is 25,500. But actually what they have not paid is here 2 rupees into 3000 only. That is 6,000 only not paid. But company is issuing for 25,500. The 25,500 minus whatever they have not paid. They did not pay only 6,000 only, but company is issuing the same shares for 25,500. It means the difference is profit, na? Yeah, are you getting it? The difference is profit. That profit we are transferring to the reserve. So that entry is shares forfeited account debtor to capital reserve account. Shares forfeited debtor to capital reserve. How much is that? 25,500 minus 6,000. It is 19,500. We are saying that being the profit on forfeited shares transferred to capital reserve account. That's all. Let me explain in a simple way. Problem is very simple. Everything is here only. Application 3 rupees, allotment 3 rupees, first call 3 rupees and second call 2 rupees. Here allotment premium 1 rupee is included. Out of this last call 3000 is not paid at the rate of 2 rupees only, you know that. So based on this we have done this problem. And also you must remember that company has issued 1 lakh shares but they got 1,30,000 shares. That adjustments we have done in the first two entries only. Whenever application money is receiving, you know that bank account attached to share application account, this you got it. And adjustment of the oversubscription, second entry you have written. Then rest of the entries are normal entries. Whenever due is there, due and receiving like this, you got up to here, right? Last entry you just remember, last entry is here, due entry is this one, equity share second call account attached to equity share capital account. Everything received? No. Few amount, that is 6,000 is not received. So out of 2 lakh 6,000 deducted and we have written receiving rest of the amount. Rest of the amount is 1,94,000. This we have written. Then after that remember this three entries as I taught you. One is for forfeited. Forfeited entry always same one. Equity share capital attached to share capital second call and shares forfeited. Okay. And second one is that for reissue with the discount. So discount entry we got it. Otherwise generally we would have written bank account attached to equity share capital account. Discount is there, we got it. If premium was there, premium would have been on the credit side. Discount is debit side, premium credit side. And transferring the profit to the general reserve. What reserve it is? Capital reserve. So that shares forfeited attached to share capital reserve account. Simple, there is nothing to worry. Understand it very carefully. And if you understand, please try to work out without looking at the solution. It will be easy. Take a screenshot. Not only this problem, take out your textbook, first work out few illustrations and also exercises. The more you practice it, it will be easy for you to understand. Stay connected and check out the playlist. Whatever is useful, use it and don't forget to share these videos. Okay, good luck.